Hey guys, Mike here. So, oh boy, woo! Did we see some green? Did we see some green? Finally. Oh my goodness. Now look, I'm not calling this a relief rally. One day does not make a rally, okay, at all. But let's just put the things in order like we've been talking about. Hadn't had any kind of rally for a long time, it seems like. It seems like it's been forever, but it's only been a couple weeks. Got in correction territory in the S&P yesterday. So many stocks. I'm talking major stocks, all kinds of, hundreds of stocks oversold on the 4-hour or lower time frames, way below the 200. All this fun stuff. And so finally we get a bounce on what? They needed an ignite, a reason to do it, right? So of course CPI comes in a little lower than expected, which is really good. And so if we can get like 2 or 3 days, I'm going to show you in the charts what to look for, okay? What to look for. But at least I always say this. Celebrate the small victories. And so if you can just get a reprieve, because a lot of you guys email me, you're in the comments, I see the stress and all that stuff. Because it's tough watching your portfolio, go down. I mean, if the S&P is down 10, some of these stocks I'm seeing down 50, 60%. I mean, that's rough, right? Even the mega caps. Look at Tesla, for God's sakes. Now what's it going on? 40, 45%, I think, before you finally get a bounce. But again, we're going to go into Tesla and stuff to look for in all these charts. Because if we start to put a couple of days back to back, there's going to be a very, very big day that will come and you have to watch for, okay? And if this happens, it's not good, okay? If the opposite happens, it's really good. And so you got to make sure we pay close attention to this. And if you think this is the start of a relief rally, put it in the bottom. Or do you think, no way, no how, it's just a dead cat bounce or whatever it is you think it is, okay? So put it in the bottom. Let me know what you guys think about that. I'm also going to show you a clip from yesterday's members video, really quick, like a 30-second clip, of why the administration and even the people in charge of the government are trying to push that 10-year down so fast. And why they're, just throwing everything at the wall right now. Okay, and it's important to understand this. And you'll go, oh, that makes total sense. Okay, and if you remember, you already know it, so don't worry about that part. And also, look, obviously we gapped up today. It was great. CPI comes in, woo! And then, of course, what happens? We give it all back almost, right? The S&P gave it all back. Qs were up so much because the Magnificent Seven were just going crazy with Tesla up almost 8-9% at some point in time. Nvidia's up 6-7. All these others are bouncing. Amazon was bouncing. And then, but Apple was like, not participating. Okay, which kind of a red signal. Microsoft, not participating. So those are two to watch. We're going to talk about those two. Also, here's what else happened. The algos and the market is just reacting to what? Tariffs. Okay, and so understand, I'm going to start off with this, and I'll try to talk slow because I know I talk fast with my accent. And understand, there is a big misconception about tariffs. Everybody thinks it's the tariffs causing this. It is not the tariffs per se. It's not the 25%, it's not the 50%. It is the uncertainty that tariffs are causing, okay? Because what happens is, if you ain't noticed, I'm going to show you real quick, just from the day, just short clips from the day, what you saw all day long coming out, okay, is we put tariffs on somebody, and then they retaliate, and then we put more tariffs, and then these other countries retaliate, okay? And when that happens, all these companies, not just here, around the globe, do what? They close their pocketbooks. Why are they closing their pocketbooks? And you hear business leaders say this all the time. You see it on earnings calls. They're talking about it right and left, okay? That they're like, oh, I've heard this many times. Well, we were trying to plan out to build this plant over here or whatever, but now we don't know what the economic plan is. We don't know what it is, right? And we don't know what these other countries are going to do. So we can't, put 10 billion, 15 billion, whatever million, $4 billion structure here and plan that out because we got to plan like way out, right? We got to get permits. We got to make sure we have the funds, all this stuff. And so we can't put that there if all of a sudden plans change and it's going to cost us more money, right? If we build that plant versus not build it. So we're just going to hold off until we figure out what the plan is, right? And this is what you saw in 2018. And the reason why it's not the tariff itself, it's the uncertainty is in 2018, we gone through the same thing, right? We would put tariffs on somebody, they would retaliate, blah, 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 right? And then it was a rough 2018. And then 2019 hit. Guess what? All the tariffs were in place. They never got removed. And 2019 went crazy, going all the way through 2020, right? Biden never takes the tariffs off China. He actually added tariffs onto China. And yet what happened? Market still roared, set these crazy all-time highs, okay? So it's not that amount. It is what the market has to price in, right? With these companies telling them, we're closing our pocketbooks, we're not going to be as much spending. And then people, of course, are going, wait a minute, I don't know if I'm going to have my job with, the government cuts and spending and the tariffs. They're like, hold on a second, right? And so then they start closing pocketbooks and it freaks out the markets. The market's like, we got to price this in. All right. And so they're pricing it in right now. That's why you see the 10% correction on the S&P, 14% on the Qs. Okay. They're pricing it in. Where that bottom is, who knows? Maybe we reached it yesterday, maybe we didn't. We don't know. Okay, nobody really truly knows. And that's why I'll talk about day when you'll actually know it, because you'll know it coming up here very soon. But that's what's happening, okay? It's not the dollar amount. It's just the company's trying to figure it out, because everybody's gotten down right now pretty much. And so that's what's happening. And then you got, remember, it's a global economy. Can't just have it here. It's a global economy. And so that's what's going to continue to happen as long as we keep doing this tit for tat. So watch this right here, and Lord knows I'm going to come back and say something that will, I'm warning you now, it's going to, make some people upset. That's fine. It is what it is. You'll get over it, I promise, because I know facts hurt, okay? But just watch this right here, and I'll come back and say what I got to say. So here's what was going on just today from 9:30 opening bell, and I finally found some in the late afternoon, but most of this happens like before even lunch, okay?
What we're hearing right now is that state media is reporting that local Walmart executives were summoned by the Commerce Ministry as well as other authorities and warned about complaints that Walmart is pushing the cost burden of President Trump's tariffs onto Chinese suppliers. What's interesting is that these news outlets are citing a CCTV columnist who is anonymous and who has been used during President Trump's first term to message on U.S.-China trade issues. That person, if it is a person, is saying that Walmart's demand to significantly reduce prices is, quote, unilateral, that the move may violate commercial contracts, and said that if Walmart insists on doing this, that the next step is, quote, beyond talks, which is a threat of taking concrete action.
Overnight, the president's 25% tariffs on steel and aluminum going into effect. And overnight, the European Union responding with roughly $28 billion of tariffs on U.S. exports. All this as President Trump is still promising those sweeping retaliatory tariffs coming early next month.
So first it was the EU overnight announcing some retaliatory tariffs. And then just in the last few minutes, Canada now saying they will be putting 25% tariffs starting tomorrow on about $20 billion in U.S. exports. They say they'll mostly be targeting steel and aluminum, but they're also going to hit some other U.S. imports. They say that'll include computers, sports equipment, and cast iron products, just as some examples.
And it's not just that. Canada, for example, Kentucky's hurting because, remember, they brew a lot of bourbon. I don't drink it, but they provide a lot of bourbon to the world, right? Especially Canada. And what's Canada doing? They ain't putting tariffs, as far as I've seen. What they're doing is pulling all of it off the shelf, and they're telling no more imports. So that's not, you ain't gonna see those in the headlines very much, right? But that's other things that are happening. Okay, all these different retaliations are happening. The only one that's quiet, I haven't seen anything from Mexico. Have you? I ain't seen anything. They're just very quiet right now. But at Europe, obviously, Canada, who knows what else is going to happen. And so that's what we're watching out for. But here's the thing. Somebody please, look, I've always said, I don't care if you're for the president, against the president. He's the United States president. Well, one of you guys, if you have access, and I know you don't, but if you did have access to anybody in his administration, send an email, give him a phone call, and set the record straight for me, please.
It doesn't make sense that our country allows electricity to be made in another country and sold into us. Who did that deal for the United States?
Okay, so of course, who did that deal? Well, Trump did.
And here he is, literally signing the deal right there. You see it 6 years ago at the bottom, and then here he is talking about it.
My great honor to announce that we have successfully completed negotiations on a brand new deal to terminate and replace NAFTA and the NAFTA trade agreements with an incredible new U.S., Mexico, Canada agreement called USMCA. It sort of just works.
So please, Mr. President, you signed the deal, okay? You signed. I even tried figuring out, did Biden make changes? I couldn't find anything. If anything, he added stuff on, right? Didn't take stuff away. And so it's like, I don't know. I'm like, yes, it's your deal. So I don't really understand why somebody's not leaning to him. So please send him an email, make a phone call if you got those connections. Say, hey, this is your deal, brother. Like, I don't know what's going on. It's, you said it was the greatest deal ever. Now all of a sudden it's the worst deal on the planet. All right. So, but that's still going to create some uncertainty. And so this continues. You're just going to see this up and down crazy mess. But again, doesn't mean we can't have relief rallies. You've seen crazier stuff, right? Now, what's the other thing that's going on you didn't see in 2018? 10-year yield was way lower, right? Way lower. Plus, they want the Fed to cut rates, right? Because the federal funds rate, even though they're raising it in 2018, was way lower, okay? So people were borrowing costs were way cheaper, okay? But here's what I was telling members yesterday. Here's why they're really trying fast to get this 10-year down, which guess what? rallying again today. The 10-year was going up. That's not what they want to see. And so here's the members video I put out yesterday for them. And so here's what I had to say just really quick about that right there. And this is important to understand. And so here's the real reason why he wants interest rates down, guys. The government by itself has over $9 trillion. Okay, they're going to re-up, refinance, whatever word you like to use there. And 70% of it's going to come in the first 6 months of the year. We're already in month 3. And so can you imagine having to do that at these rates? We're already paying $1 trillion a year already in interest debt. And he knows that. Okay, so this is one major reason why they're moving so fast to try to at least to get the 10-year down. And you look at, public debt net interest payment to GDP. Like, you know how bad off Greece was? Like, they're second, we're double them. And here's the other reason. Look at this. Small business actual average interest rate. If you have a small business, you're taking out loans right now, let us know what your average interest rate is, because here's normal. This was 2018, 2019, anywhere from 6 to roughly 7, 7.25. And I know 8.8, and it was 10, by the way, doesn't seem like a lot, but you're talking about hundreds of billions of dollars being loaned out. That drop, almost 2% drop down to get back to norm, that would be enormous, guys, enormous, okay? So hopefully that clears things up. Let me know in the comments what you think about that. Now, debate down in the comments was, hey, gaps only fill during regular hours. That's not true. Right here, you can just Google it. No, a gap fill doesn't have to happen only within regular trading hours. It can occur during extended hours. And this is very important. And I will show you right here on Tesla. Remember, we talked about this yesterday. Let's just do a drill together. Here's yesterday. This is during regular trading hours. If you click down here, if you got trading view, you can do extended trading hours. Let's go over here to the gap. I'll prove this, okay? We'll sit here and take the little trend line. Do we agree? This right here, let me zoom in. That is the gap. Boom, we'll click it right there. That will be the gap on regular trading hours, okay? Now, we'll come back over and we'll go to extended trading hours. And you can see, actually, we'll stay on regular trading hours. You can see it did not touch the white line, correct? We all agree on this. It's not at the white line. No, it's not. Click on regular or extended trading hours, and what do you get? Boom, magic. Oh, look at that. Bounced right off of it. At 7 p.m. is when it hit it. The next day we gapped up, and we've taken off ever since. Okay, it's been a nice move up, 15, 16%. In just a couple of days. Okay, so that's why it's important to remember this. Now, why do I know this? Because Tesla has done this multiple times, and so has many other stocks. Here is Tesla. Remember this right here? So if we zoom in here on February 11th, see how it's not touching the white line? Not touching at all. Okay, that is marking the bottom of a gap, and you got a 13% rally after that. Go to extended trading hours. Again, we'll find February 11th. Let's go back over here. There it is right there. Now we've added more hours on it. What happened? Right there, same exact thing. Now it's touching it, but it happens in extended hours and pre-market. But you wouldn't have known that. Okay, so you've been there going, oh, it didn't fill the gap. Yes, it did. It had another time where we didn't think it touched a major moving average. It did. It just did it during pre-market. Okay, so this definitely happens. It happens on many stocks. And so there's no rule saying it has to be that way. So if you're owning stocks like this, and you're looking for a gap fill, monitor the extended trading hours, okay? And of course, Tesla, before you even get into the charts, more bad data for their car sales. Now, U.S. registration dipped 11% in January. So this just continues on. More bad news with Tesla and its car sales as usual. Again, when we look at Tesla, we got this trend line of death right there. Oversold on the lower time frames. We did break above the trend line of death right there, as you can see. Big move up today. Now, above it, you have a very big trend line right there, which was support. Now should be resistance, and you have a gap above that, okay? And so if it can break that trend line, 270, 24, probably 269 is what you're looking to try to achieve and get above and close above. So there's that trend line right there. Held support very nicely. That should be resistance coming up. And what you don't want to break is that like 214.69. Okay, that's what filled that gap. When you even look at this right here, it did close above the weekly, which is good, weekly 200 moving average, but there's the other 200 moving average. All right, so just to even get to retest the 200, you're talking about 13% move. Just to get up there and retest, and there's so many stocks like this, by the way. And that's what you're looking for, these retests, right? NVIDIA is the same way. It's below its 50 weekly, below its 200. Even to get to the 200, it's going to have to make almost a 10% move. But a lot of these are doing what? They're in major discounts, right? Bouncing off the 0.79 fibs, the golden pockets, okay? Down huge, 30, 40% for crying out loud. We're talking about mega caps, okay? And so That's why you're seeing this bounce. And of course, it has to mitigate these fair value gaps as it comes back up because it's been absolutely hammered. And so that's what we're looking for, okay, to build one day after the other. That's what we're looking for, is market structure on the larger time frames, not just the smaller time frames. Again, on the daily, it wasn't oversold. On the 4 hour, though, it got oversold. That's actually big for NVIDIA because I've showed you on the daily, it hadn't been oversold in quite a while. And so these lower time frames get oversold. That's when you'll get a relief bounce. That's what we're going to call it for now. Oversold bounce, short squeeze, whatever you want to call it. Please feel free to put in the comments what you like to call it. And so that's what you're looking for. You don't want to break the 0.79 fib because then you're basically going 102, between 102 and 98 bucks. Or, now you're looking for this right here, 121 to get rejected right there, the 0.5 fib and the 50 week. And then, of course, your 200 moving average is almost like 127 right there. Then when you just come over and look at the others real quick, look at Apple. Apple did not participate today. It's sitting below its 200, but it's sitting in a zone where you might get a bounce. It's in this discounts in this shaded area right here. We've gotten multiple bounces before, so that's what you're looking for. It's going to be another one when it comes back up because that 200 is sitting right there, that 0.5 fib. Is it going to reject it if it starts to participate, right? And this is the one we talked about. Like if it participates in the sell down, that's when you're really going to see the market move down, and it really did, right? And so that's what we're looking for. You got to have Apple. You got to have your Microsoft, okay? These heavily weighted stocks. Again, straight distribution on this one, but it's holding, right? That fair value gap we talked about, we marked it out about a week ago. Again, this is a trend line of death, okay? Got to get above it. When you start breaking these trend lines of death, then you can actually start moving in, okay? But you got to kind of just be patient on this, right? The 200 right there. Again, some people, and these are if you're a dollar cost averager, you probably can't beat this, right? Google already got rejected its 200 once. Meta hadn't even got those 200, but it's going to have a trend line of death right here, which was support. Now it's going to be resistance, okay? But it's in a major discount. All right, you look at that. Meta, again, on the higher end, you got a weekly fair value gap right there with that trend line. And so watch that around between like 638, 640 right there. Amazon, this one came up. This has this one we talked about is another trend line of death right here. All of them have these trend lines have just been grinding down. This one tried to close, I think it's like right on its 200 right here. So that's going to be another one to watch. We already talked about Tesla and NVIDIA. AMD actually, I can't believe it's actually green today, 5%. But look at this thing. Another trend line of death. That's what we're going to call it. Don't talk to me about AMD until you get through the trend line. That's 1, 2, 3, 4. That's 4 rejections off that thing on the way down. And it has a larger trend line once it breaks that one. Right, but this one's a mess, and it's actually way more expensive than like NVIDIA and Avgo and all that stuff when you look at it. Now, one to look at just for the heck of it, watch NEO here because this one right here, you talking about trend line of death? 3 years this trend line has held this stock down. 3 years, and it finally broke out this week. It tried doing it. It had a false breakout last week, and then again, remember what are Chinese stocks doing? They've been going through the roof. This has not been participating. Okay, they have earnings next Friday. I'm not saying the company's good. This is strictly off a technical basis, off a chart. I've showed you many times. I showed you when these major trend lines that are pressing it down end up getting broken through, especially if you have at least decent earnings or something the market can grab onto. You'll usually try to get a catch up or recovery, whatever it is, and money will flow into it, maybe for the short term, not because it's a good company, just because it's been basically compressed and compressed and compressed. And the reason why, look at XPeng, the exact same chart. Look at this. This thing had the same trend line of death for 3 years. Had this trend line pressing it down, pressing it down, pressing it down. And again, I ain't saying anything about the company. I'm looking at just at the chart. And you can see it. When that thing broke out, retested it, it just exploded, especially once it got earnings put in there. Look at this, 158% up in 143 days. So that's all I'm putting that on your radar for. Do what you want to do with it, okay? I'm not saying anything about the company per se. All right, now, looking at Palantir here, there's another one been holding up. It's in the 0.79 fib, bounced, 100 right below it, 50's right on top of it. If you're looking for this to move up, if we get this kind of rally going, these are the kind of stocks that are going to start going. You got what? Down here, if it breaks that 100 moving average, it's coming down like 64.32. But up ahead, you got a weekly fair value gap, which will be the draw for this if we continue to get some green. That's between 90 and 94, I believe, right there. And so keep those numbers in mind. And so that's going to be the draw to the upside. You got to get through that first. That will usually slow stocks down unless you get some kind of just insane short squeeze. Obviously, you can blow through things like that. But normally, that's what you'll see on these kind of stocks. And so just remember, if we get the move back up on your stocks, if you're pulling that 200 up, you want to see if it gets through the 200 or it gets rejected. That's the big thing, especially on the indexes here. But if the big boys start getting rejected, the 200 coming down, obviously, we know the indexes are coming down too. Now, when it comes to earnings tomorrow, I wouldn't really hold your breath on too many here, but you do have Dollar General in the morning. And then you're going to have DocuSign, Ulta, which has been absolutely beaten down, reporting. We'll see how the makeup companies are doing. And then PPI, okay? So core PPI month over month, headline PPI month over month, unemployment claims before the bell opens. 30-year bond auction, honestly, is usually not a big deal, okay? So anyway, hope you guys got some out of it. Please hit the like, subscribe button. Let me know how you're playing it today. Thank you for signing up for membership and left the McDonald's combo. Let me know if I can do anything for you. And that's everything you get with it. And I'll see you guys for another fun one tomorrow.